Munster earnings class. I am Michael Waxie Parness, and we are the Affinity Trading Group. We offer this free class to you every quarter, pretty much, to discuss one of the best trends that there is, and I've tracked for the last 20 years, which is earnings runners. So I'm going to get right into the class and go from there. Obviously, trading and investing can result in large losses and may not be an activity suitable for everyone. There is always risk in trading. People can and do lose money, so don't trade over your head. Email now for scholarships. The first 5 emailers get 1,000 to 2,000 off. Coaching from Mike DeGioia and myself, Waxie. You should email support at affinitytrading.com, or you can email both of us. Be the first in our new Elite Trader program. Let's talk about earnings runner. So the trend is that stocks trend to run up into their earnings report each quarter. We typically look for high beta names to play, though oftentimes we play Microsoft, Intel, Oracle, and the like, as they usually are very solid, and with options you can make 100+% at times, sometimes much more. So what's the play? The play is buy a stock or call option on a stock roughly 10 to 14 days before they report earnings. Yep, it's that simple. With this one, timing truly is everything. So I like to leg into the play just in case I buy too soon or too late. Sell before earnings as a rule. We don't want to hold over earnings because we don't have any control over what a company is going to report, whether they have good earnings, bad earnings. Indifferently, the trend is to sell before earnings, typically right before earnings. So what are the downside risks? The downside risks, the overall market definitely impacts this trend. Obviously, if the market, we're long, this is a long type trend, meaning we will be long these stocks into earnings. So if the market tanks, market goes down, 300, 400, 500, 1,000 points, then there's a good chance that the trend will not work this quarter. It usually works. It has worked historically, but no trend is perfect. Also, watch the early part of earnings season to see how like stocks react. That often sets the tone moving forward. For example, Facebook reports and misses and goes down 20%. Then Twitter, LinkedIn, and others in the sector may tank into their earnings as well. Google, Amazon, even the internet sector. Conversely, Facebook reports and blows out and goes up 5, 10, 15%, whatever it may be, then it's likely that those stocks will run even harder into earnings on the expectation that they'll have positive earnings potentially as well. As I mentioned, we're offering some scholarships, so be the first to respond. So bonus round. Oftentimes during earnings season, you can catch stocks the same day for nice gains. If we get a nice down day early and the stock is reporting after the bell or before the bell the next day, that stock often gets a nice bounce as the day goes on. Why? Shorts don't like to hold over earnings either, so they square their position. So in other words, that often plays out. We have a down day, the Dow's down, 75 points, 150 points, whatever it is. You have a stock, let's say you have Apple, and Apple is down $1 to start the day. Well, it reports at the end of the day that day, for argument's sake, there's a good possibility that Apple may reverse and even go green, and may go significantly green. Okay. Mike, you want to post that in the general chat? Oh, you did.
Yeah, I
okay.
did. I figured
Great.
that out.
So there's a, all right, thanks, Mike. So there is the to sign up for the paid class, which we are going to hold right after this class tonight. And so during the week, we're going to be offering the class all through the week. You can sign up now. Also, don't forget my, which is recorded as well, so you don't have to be there. You'll get the recording. There'll be another 10 stocks and options besides the one I give you now for the paid list. I think it's a pretty strong list and has a lot of potential. As far as we also have upcoming a class on the state of the market, which I give every year, and we've done very, very well with over the years. I think my winning percentage is quite high. So that's something you might want to sign up for as well. Mike, you want to post that link? That would be great as well, if you can. So I'm going to give you a stock, one idea for free, which is Apple. It's right here at 120-ish. It's actually closed at 120 on Friday. Earnings for Apple are Tuesday the 31st of January after the close. So we're looking to buy the Apple 115 January 27th calls here tomorrow at the open. Stops on the stock at 117.29. You can hold the stock until the close on the 31st. Apple obviously does not report until after the options expire, but typically Apple gets the run the week before earnings, so that's what we're playing. This way there's not a big premium. Thank you, Mike. Mike just posted the annual state of the market sign-up form. I will go over in that class. I will talk about my predictions and the trends for 2017. I will talk about specific stocks and options to play for the year. And I will also talk about commodities, gold, silver, oil, the overall market. It covers a lot of ground. It's a pretty long class. Mike will also be giving his technical take on the markets as well. And like I said, we've had a lot of success in the past, so I expect the same to happen again this year. So you should sign up for that. And with that, that's pretty much the trend. It's a very simple trend. As I stated, basically you're buying a stock or an option on a stock 10 to 14 days before they report earnings. And then for the bonus round, you also have the opportunity, in many cases, you get a down day at the open, fade the gap using the stocks that are reporting at the end of that day or the next morning. All right, I will see everybody in a few minutes in the paid class. Look forward to it. And you can catch the recording of this or the earnings runner class, the paid class, as well. Thank you, and let's rock and rule.
Hey guys, I just wanted to mention something before we wrap up the free class here. This year is kind of a double special on Apple. I'm just going to screen share for 2 seconds. I'm just going to look at the Apple chart. The double is that Apple on January 24th has its annual Apple conference, and then they have earnings right after. So just figured I'd mention that. Also, Apple's kind of at a key breakout point, which is kind of an important element as well, meaning that, let's see if I can get this thing going. Right, hold on. There you go. I'm just going to project you the chart because sometimes stocks, when they kind of hit this technical trigger point, they can explode to the upside if enough people jump into it. So let's just take a look at Apple. Just hopefully my projector works. So there's my projector on Apple. I'm going to put this to a weekly chart, okay? Because if you look, Apple has this kind of resistance level up here at the 130 to 135 level. So there's an area of congestion right here to the left. And let me just see if I can fit this in for all. So you got this area of congestion to the left, but if we break this level, so you might get a little pullback before we launch, but I mean, if we launch, we're going into all-time highs for Apple. Now, the conservative target area would be right smack in the middle of that area of congestion. So you see our target is up here somewhere. So Apple is a stock that has a tendency to make rounded bottoms. It's above all of its moving averages, above its 10, its 20, its 50 period moving average. It's breaking above this little resistance level here. It's got two news catalysts, meaning earnings and that conference. And then, of course, it also has a technical catalyst as well, meaning that it's right at a resistance level. All right, that's all I wanted to mention, guys. Hopefully this idea works out for you, and I'll see you in the paid class.